So just a couple of weeks ago, we had some payments coming in from Gulf for the consulting services that we gave. Now that payment didn't came. The client, to which we came to know that it was stuck in the name of compliances, asking a lot of questions. This is the list of questions that they asked. From which we decided to move to the banking system, which is known as offshore banking. So an offshore bank account is just a bank account on the premises outside your country, which gives you more banking access and unleashes the banking powers that you have never thought of. Basically, let's say if I want to drive this baby down the road in India, I'll be restricting what it is made for. So I'll have to fly it to Autobahn in Germany and make sure I realize its full potential. That is what offshore banking does. People use offshore banking very simple reasons. International business operations, asset diversifications, wealth protection, multi-currency access. You can access their stock markets without facing forex charges. And then of course, tax efficiency, or we say in Shunitex, global tax optimization. So the problem is very simple here. Most of the businesses struggle in banking and taking payments offshore is because they don't redesign their structures when they scale. They just copy a friend of friend template, or they just inherit a structure which their old consultant gives. And that needs to change with time and understanding all the maps that we have discussed. So we have a client who came to us in 2024, have their businesses in India, UAE and Mauritius. And this is a second generation business. The group's annual turnover is $180 million or more than that. And they have purely clean business. Just that they had 5 offshore entities, 2 nominee directors, which were their employees only, and 3 jurisdictions. And as a result, their remittance was always delayed. Their accounts were reviewed quarterly. And the family was not fearing taxes. The family was fearing losing the banking access, or because of the banking questions that came when the transactions were moving. And the banks were not asking them, is the money legal? They were asking them only one question. Can they explain it to their regulator? The one who is the final authority, the central banks, the FATF, all other directives and lists. So we first mapped a few things. First is ultimate beneficial owners, the capital entry points of the transactions, the intercompany logics that they used to give to banks, and then the treaty misuse risk that they were facing because Mauritius was involved. Most of the transactions had no commercial narration. 2 entities were only to receive and pass funds. And then we decided to reduce the entities from 5 to 3, remove all the nominee directors as they needed income in their own names for further loans. We shifted the profit logic to substance jurisdictions while realigning the transfer pricing activities within the entities. And the main question that we solved was, if the FATF auditor sits tomorrow, what breaks? And the whole mindset of this thing while doing the solution, there was only one mission: to not keep it private, but to make it boring. So in compliance, boring is beautiful. And this is what everyone follows who are in the compliance industry or who wants their transactions to be done cross-border. You need to make it as boring so that it is 100% silent and gets passed easily. So the ultimate goal was we did explainable money, we did audit-proof narratives, and all this while structuring the wealth in a way which passes on to grandchildren.